Gold Daily Analysis, June 29, 2011, commoditiesmansion.com. August gold closed higher on Wednesday, driven higher by the weakening dollar as investor sentiment shifted to a risk-on mentality. Although the move was impressive in the wake of last week's sharp sell-off, the rally looked tentative at times, which is typical for a counter-trend move. This morning, the Greek Parliament voted to approve austerity measures, which are likely to open the door for the first tranche of financial aid pledged by the European Union and the International Monetary Fund. The news was bullish for the euro, gold, and equities, but proved to be bearish for the U.S. dollar. A lower U.S. dollar traditionally makes commodities priced in dollars attractive. This is the main reason for the strength in gold, silver, and crude oil. If the trend in the dollar remains down, then August gold is likely to firm. Otherwise, it may become range-bound. Although traders often buy gold as a hedge against a calamity or uncertainty, this hasn't been the case the past several weeks. Despite the close call in Greece and the real possibility of bankruptcy, gold traders remained remarkably stubborn about taking the yellow metal to a new high over the past several weeks. The reason for this could have been that buying gold wasn't the only safe haven option available. Gold appeared to be fighting the dollar and the Swiss franc for the same investment dollar. As the Greek tragedy unfolded throughout June, gold remained range-bound, but with a slightly upward bias. It never quite could attract enough buying power to push it to new highs, the reason being gold was expensive, safe haven vehicle while the U.S. dollar was cheap. In addition, today's gold investor was probably interested in getting a good return on his investment rather than sitting in it for the long run while waiting for another economic collapse. Rather than watch profits erode, gold traders took a little off the top as the metal reached historical highs. They didn't seem too interested in catching the big winner, but rather more concerned about letting paper profits erode like stocks and real estate did over the past decade. This assessment leads to the conclusion that traders are likely to sell rallies in gold over the near term into this area as the market reaches until the market reaches a true value zone for a buy. New debt problems can arise in the Eurozone overnight. In the past few weeks are an indication investors will most likely seek the safety of the dollar, Japanese yen, and Swiss franc in times of trouble rather than sit in overpriced gold. Technically, the rally in gold on Wednesday, you can see this quick pop here, helped make 1490.80 a new main bottom. It also helped form a new range between 1559.30 and 1490.80. The retracement zone of this range and next potential upside target is 1525.05 to 1533.13. Two prices at 1511.30 and 1511.70. See this clustered here, horizontal line of 1511.70 and this downtrending angle of 1511.30 could become important pivot prices tomorrow. First price is a downtrending Gann angle, and that's 1511.30. That could become resistance. The second price is a 50% area of the recent short-term range of 1464.10 to 1590.30. So that price at 1511.70 could become important. Combining the two together, it's basically a resistance cluster. On the downside, uptrending Gann angle from the bottom at 1490.80 comes in at 1480 and 1502.80. Breaking out above 1480 will be a sign of strength. That's holding above this steep red line right here. And if it does break above this and hold above this area, then we could see a rally back to 1525.05 to 1533. A pullback into the angle at 1502.80, a break back to this green angle here into this space, could provide a counter-trend buying opportunity. Over the short run, gold may mount a strong short covering rally into this retracement zone. However, the inability to complete this pattern will mean that aggressive bearish traders are beginning to exert their authority. For more information, go to commoditiesmansion.com.